Hello and welcome to AI Market News by LM. All right, let's get right into it. Today was a really fascinating day for the markets, and if we just read the headlines about a big tech crash, well, we're only getting half the picture. So the big story that's got everyone talking? A major shakeup in the tech world. The NASDAQ Composite, which is that key benchmark for tech stocks, took a really steep dive. We're talking a drop of over 1.5%.
So what's really going on here? What was behind this big plunge? Well, the tech-heavy NASDAQ got dragged down, and it was a sharp sell-off in some major technology and software stocks that did it. It really seems like investors are suddenly getting cold feet about some of the market's biggest, most beloved names.
And you can just feel the anxiety in the commentary from across the market. There's this growing fear, this real concern that the insane pace of AI advancement could just completely upend the traditional software business models. It's so intense that some are even calling it a software Mageddon. Wild stuff.
Okay, so the pain was definitely not spread evenly. It was felt most acutely in the semiconductor and software spaces. I mean, just look at AMD. It plunged a staggering 17% after a disappointing forecast. That really set a grim tone for the whole day. And this wasn't just one company having a bad day, not at all. The Magnificent Seven's index, which tracks all those tech giants, it fell. And maybe most importantly for the chart watchers out there, the NASDAQ 100 actually slipped below its 100-day moving average. That's a bearish signal that gets a lot of people's attention.
But here's where the story gets really interesting. Seriously, if we only look at the tech sell-off, we're missing the entire plot. Because right under the surface of all those scary red headlines, a completely different story was unfolding. And frankly, it's a much more optimistic one.
And this right here, this perfectly illustrates that major rotation happening under the hood of the market. So while the main S&P 500 index, which remember is super heavily weighted by those giant tech companies, was down, the equal weight version, well, it actually hit a new record high. Think about what that means. It tells us that the average stock in the market is actually doing great, even while the tech titans are taking a hit.
So what's the big takeaway from that? It signals a real broadening of the market's strength. We're literally seeing investors move their money out of those crowded, mega-cap tech stocks and into other areas. We're talking small caps, value stocks, and industrials. And that shows a growing confidence, not just in a handful of tech darlings, but in the underlying health of the broader US economy. That's a huge deal.
And this whole theme of divergence, of two different stories being told at once, wasn't just happening in stocks. Nope. We saw a very similar story playing out over in the currency markets, especially when we look at the US dollar versus the Japanese yen.
The Japanese yen just kept on sliding against a strengthening US dollar. It's now creeping up toward that 157 level. And for any currency traders watching, that is a huge psychological and technical point. A break of that level could really trigger some more significant moves.
Believe it or not, the yen is now officially the worst performing currency among the G10. That's the world's 10 biggest, most traded currencies. Ouch. Part of this weakness is being driven by some political uncertainty over in Japan, and it's just a stark contrast to the strength we're seeing in the US dollar. Now, as the yen gets closer to that 160 mark, traders are going to be on high alert. We'll all be watching for any signs that Japanese authorities might step in to try and prop up their currency.
Okay, so we've got all this conflicting data, right? Tech is falling, but the broader market is rising. It's confusing. So how in the world can we get a real read on the overall mood of investors? Well, let's look at a couple of key tools that help us measure the, let's call it, emotional pulse of the market.
First up, we have the Fear and Greed Index. This thing is basically a market psychologist. It looks at 7 different indicators, things like market momentum and volatility, to figure out what's really driving the market. Is it fear, pushing people to sell, or is it greed, causing them to jump in? It gives us a score from 0, which is extreme fear, to 100, which is extreme greed.
Okay, next up is a really important one, the CME Fed Watch tool. This thing is absolutely crucial because it gives us a direct window into what the market thinks the Federal Reserve is going to do next with interest rates. It analyzes futures prices to calculate the odds, the probability the traders are betting on, of the Fed raising, lowering, or just holding rates steady. It's a must-watch.
All right, so what's next? Where do we go from here? Well, looking ahead at the economic calendar from investing.com, there are several key events coming up that could either pour gasoline on this market rotation or stop it dead in its tracks.
Get ready, because Thursday is shaping up to be a huge day, especially for central banks. We've got big interest rate decisions coming from both the Bank of England and the European Central Bank. And then, back here in the US, we'll all be watching the initial jobless claims data.
That's going to give us another important read on the health of the American labor market, which is, of course, a massive piece of the puzzle for the Fed.
And all of this brings us to the big multi-billion-dollar question: is this great rotation out of tech here to stay? With the central banks taking center stage, the next few days are going to be absolutely critical. Believe me, we will be watching very, very closely to see how this all plays out. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.